Hello and welcome to another weekly installment of the US Dollar Index Market Commentary. It's proudly brought to you by icecommentary.com and Trade with Precision. Now, this 82 level that Nick McDonald has been speaking about has proved to be too much resistance for the market, and we've sold off. So we had quite a bearish week, okay? Now, this week, yes, it has been quite an interesting one because of the fact that we had Martin Luther King Day on Monday, so the markets were closed in observance of that day. But for the rest of the week, yes, we had quite a sell-off. Okay, we had quite a few bearish days, and the US dollar was sold off. So you'd have to say, well, what does this mean? Is this the start of a bearish move for the US dollar? Well, to be honest with you, my answer to the question would have to be no. And let me explain to you what I mean by that by looking at the euro and pound. For starters, the euro has been the currency that's pretty much gotten battered over the last 2 to 3 months, and you can see that by virtue of looking at this trend that's formed. Now, every trend, it gets to a stage where it becomes long in the tooth. In other words, it needs a bit more life and shaking into it. So you can see, looking at these indicators, how they've started to flatten out, and RSI has started to diverge at these lows. And as a result, we've had a 2.5% rise in the euro, pushing the euro dollar up. Now, you'd have to say that's part of trend trading. We need to have cycles in price and pullbacks before the next move down. So what would I anticipate to happen here? Well, we're actually at 1.3, the very, very big psychological number, which has been resistance and support in the past. So where we are right now, I could say, yeah, quite comfortably, this is where I anticipate some selling to come in and the next move in this downtrend to occur. If that level fails, however, you've got another level of 1.32, which actually has been some good support and resistance structure in the past as well. So if we push up through in the next couple of days, then I would expect some this ceiling of 1.32 to hamper the bulls. Let's look at the weekly chart, and it's just a little bit clearer on this chart how strong 1.3 and 1.32 are over time, how well prices has bounced off these levels. And let me just show you as a zone of support and resistance. Now, where those two levels that I anticipated being where the selling comes in, well, if we get selling here, that's my first pretty much port of call. If that fails, then I expect some pullback into there. Actually, 1.32 will be better because the pullback would be a little bit more of a healthy pullback into these declining moving averages for a nice push down. And the reason why I expect it to continue, well, we've been making lower lows and lower highs all the way through. We've got convergence to the downside. By all intents and purposes, I don't see any reason for this trend to change right now. Okay, I don't have enough reason to call a change to this downtrend in the euro dollar. Now the pound, let's have a quick look at that. And just comparing this with the euro, you can see it hasn't had such a tough time with the dollar of late. It has sold off, but not as to a high degree. You can see we've put an ever so slightly lower low right there, and we've been putting in some lower highs. The next question is, where's the next lower high going to be? So is it going to be here, where we are right now, or are we going to see a little bit more bullishness on the pound before the next move down? I don't quite know where that level is going to be, but I have to say that I do anticipate some kind of continuation to the dollar strength that's been happening in the short term. I do anticipate short-term bullishness on the US dollar. I just have to point that out. But where we are on the euro and the pound, we are pretty much set for another move to the downside. Okay, we're coming up into those resistance levels, and like I mentioned to you on euro dollar, we've got two levels where we can sell off to, which is 1.3 and 1.32. And the pound, I'd have to say it's probably 1.57. I would anticipate some kind of selling to occur around there, and then a anticipated push to the downside on this chart. So I have said that my view on the US dollar is actually quite bullish. But let me just tell you this, my time frames don't agree. Now, what I mean by that is my long-term view on the US dollar is actually bearish. And the reason for that is, looking at this monthly chart, you can see that we've been making lower lows and lower highs, and I don't see any reason in my mind, for me to change my opinion looking at this chart. Now, I'd have to say, as a trader, I'm looking for where is that trend going to end. So stringing my fibs, I can see we've got a nice potential sell zone up here for potential selling to come in. If I happen to use my my box function here on TradeStation, I'll show you that there is actually quite a nice level of resistance that could potentially come in through this zone. Okay, so anywhere from 82 and 3/4 up to 84 and 3/4. So we've got a 2-point area of resistance that I'd anticipate price to battle to get through. Up here, this is where you'd generally find long-term bears would step back in and increase the selling pressure and push us to the downside from there. You expect some kind of volatility to occur at that level. So that's my long-term view. Now bear in mind that ceiling of 82 and 3/4 to 84 and 3/4 when we look at these lower time frames. So on the weekly chart, yeah, we didn't get through 82 this week, but you know what? As I've already mentioned, it's healthy to have pullbacks. So any pullbacks into these levels will be great for another assault on the overall resistance ceiling on that monthly chart. So where would I anticipate some buying to come in? Well, to be honest with you, where we are right now, at 81. This is 80 even. Could expect some kind of a move off there. If that fails, 79. Nice little move through there. But if that fails, the last real chance to doing that I'd have is 78. The reason why I say that is because if I use my Fibonacci from that low to the most recent high, you can see if I zoom in how we get a cluster of support and resistance at 78. So that actually shows me quite a strong level of interaction with price over time. So any real deep pullback through 80 and 79, you expect something to come in at 78. So I've got these three levels on weekly that I'll be waiting to see some kind of support. But I don't think we're going to get down to 78. I honestly don't. The reason why I don't is because on this daily chart you can see how good 80 and 79 really are as support levels. Okay, just looking over the past time here, how prices interacted at these levels. So the first couple of days of the week are going to be quite important because I want to see some kind of buying to step in and the bulls to really claim the day and push the dollar up, and which would turn those pound and the euro charts down at those resistance levels. So we anticipate some kind of buying to happen here. Guess what? If that doesn't happen and we do get a bit more of a deep pullback, then bang, we get a nice little push up from that level there. So that's pretty much my play for the week. I'm anticipating some kind of hold at 80. If that fails, then a pullback down to 79, and then looking for some buying to come in then. All right, folks. Hopefully you found this useful, and please keep it safe in the markets, and hopefully have a good trading week. I look forward to speaking with you soon. Bye for now.